Here's the twist in the U.S. job market story. Rising unemployment claims don't necessarily spell doom, yet. But here's where it gets controversial. The numbers are up, layoffs are technically low, and economists are scratching their heads. Let's break it down. Last week, the U.S. Labor Department reported a jump in new applications for unemployment benefits, hitting 235,000 for the week ending August 16. That's 11,000 more than the previous week and slightly above the 229,000 economists had predicted. On the surface, this might sound alarming, but context is key. Since the pandemic recovery began over 3 years ago, weekly jobless claims have mostly hovered in a healthy range of 200,000 to 250,000. So is this a red flag or just a blip? And this is the part most people miss. While layoffs remain historically low, the broader labor market is showing cracks. July's job growth, just 73,000 new jobs, fell far short of expectations and erased nearly 250,000 jobs from revised May and June data. The unemployment rate edged up to 4.2%, its highest since early 2023. These numbers sent shockwaves through financial markets and even triggered a political firestorm. President Trump's administration swiftly fired Erica McIntyre, head of the Bureau of Labor Statistics, which compiles the monthly employment report, though it doesn't handle the weekly claims data. But let's zoom in on a hotspot, Washington, D.C. Its unemployment rate soared to 6% in July, marking the third consecutive month as the nation's highest. Why? 2 words: federal layoffs and tourism. Earlier this year, Trump's Department of Government Efficiency axed thousands of federal jobs, while a slump in international tourism, D.C., its economic lifeblood, has left local businesses reeling. Neighboring states like Maryland and Virginia, where many federal workers live, are also seeing rising unemployment. Meanwhile, major corporations are trimming staff. Procter & Gamble, Starbucks, Microsoft, and even Meta have announced layoffs in 2024. Tech, retail, and media sectors are feeling the pinch. And here's a paradox. Employers posted 7.4 million job openings in June, down from 7.7 million in May, yet workers are quitting at the lowest rate since December 2023. Confidence is waning. Some economists point to Trump's aggressive tariff policies as a culprit. By rattling trade relations, these tariffs have created uncertainty, making companies hesitant to expand. Others argue the real issue is a cooling economy struggling to adapt to higher interest rates and shifting consumer behavior. So, what's next? The 4-week average of unemployment claims, a smoother indicator, rose to 226,500, and the total number of people collecting benefits jumped to 1.97 million in mid-August, the highest since late 2021. Here's the big question. Are we witnessing the early stages of a slowdown, or is this just noise in a resilient market? Do Trump's tariffs deserve blame, or are companies simply recalibrating in a post-pandemic world? We'd love to hear your take in the comments. Are we in for a rocky road ahead, or will the labor market stabilize? Share your thoughts, and let's keep this conversation going.